before we commence the program of the day, we wanted to know if there's anybody that have any question on any of the things we've taught so far, so that we can lay hands on them before we begin what we have for today. So is there anybody that has any question at all on what we've done so far? Please, if you have, you can raise up your hand. Thank you. I can see somebody's hand up. Okay. Madam Betty. Madam Betty, what's the question? We'd like to hear it.
Okay, good evening. So regarding yesterday's teaching, there is a particular place where you mentioned working vendor, cash, and bank or something like that. So my question is very simple. Like, when do you get to use that? Unlike the other vendors where you mentioned their name, their company, and all that. So when do you get to use that? Then another question is on journals. Are journals prepared like after each transaction or every day, or how does it really like work? So that's it.
Okay. So I made mention of two things. Let me open it so that I will be looking at it when we are discussing it. Let me just open it. I think it will be easier if we have a visual of what we are saying. I think it will be far easier. So she's asking about working vendor bank and working vendor cash. And when we were discussing this, I remember saying that the essence, this is a control that OFS we impute to our customers. It's not as if it's a standard anyway. We developed this policy. And the reason why we did it is so that we can keep accurate track of all the purchases made cash and all the purchases made through bank. All the purchases made cash and all the purchases made through bank. In the same vein, we also want to keep track of all the sales made cash and all the sales made through bank. So we put working customer cash, working customer bank for the sales parts, and we do the same thing for the purchases part. So there are companies that have a mixture of both cash purchases, transfer-based purchases, that's purchases through bank, and the credit purchases as well. So for the credit purchases, obviously you have to identify, if nothing else again, at least the name of the person you are owing. So you identify the names of the people and so on and so forth. That's why there are names for all the other vendors and for all the other customers. Then if you walk into somebody's shop and buy something and you pay cash instantly, in most cases, most people don't ask name. You don't ask, they don't ask for the names and the details of both the supplier and the customer that bought cash. In fact, it's easier when you are dealing with a supplier. You know, we are discussing this does not happen for corporate businesses like large companies, no, because large companies, they know all their customers. But we're talking about SMEs, small companies. Let's assume you have a warehouse, and then I walk into your warehouse, and probably your warehouse, we use Fanta beverages. So let's say you have a warehouse for beverages, and in your warehouse, I walk in as a customer, and then I order for 20 crates of Fanta, 15 crates of Coke, 30 crates of Sprite, 11 crates of Mirinda, and so on and so forth. I'm done. I'll place my order, and then I pay. When I make payments, it's not all customers that in that scenario will come and start telling you their name and so on and so forth, unless the person on the counter insists for record purposes. Otherwise, that information is gone. So in that kind of scenario, if you don't have the name of that customer, you just record it as working customer cash or working customer bank. It just gives us an accurate synergy of all the monies that came in cash and all the monies that came in through bank. Yeah, so it's not actually a standard anywhere. It's just as a result of trying to synergize the records so that everything will be a little bit streamlined. So does that answer your question, Madam Betty?
Yes, the first one. Yeah.
Okay, so for the second question, do you mind? Can you remind me the second question, please?
I said journals, are they prepared after each transaction or every day? How does it work?
Journals does not have a specific way you prepare your journal. But best believe that you do your journal at the end of the day to avoid recording one twice. That's the best way to treat a journal. So journal transactions of yesterday, when I come to work today, I'm recording journal transactions of yesterday. So yesterday have started, they have concluded, is gone. I'll record journal transactions of yesterday just to avoid error of commission, that is duplicate entry. Error of commission, that is duplicate entry. So it's not as if there's a standard that says you have to record your journal at the end of each transaction, or there's a standard that says you have to record your journal at the end of the day. But we advise clients to record journals at the end of the day. If you are the kind of person that once it's 5 p.m., you're already feeling like I want to go home, then record the journal of yesterday, the following day. So today, that is 5th now. If I come to work in the morning, I'm recording journal of transactions that occurred 4th. And then inside the journal, I mentioned it yesterday. But let me open a journal so that we'll have a view of what we're saying. So inside this journal, you can backdate your journal and record the journal to carry a specific date of your choice. So what I advise clients to do is, when you open your journal here, it will carry today's dates. You understand? So you just click this place and then click on yesterday's dates and then make your entries before you save. So you click on this calendar here. You click on this calendar here, you make the adjustment on the previous day, I carry it out. If you have the stomach to sit down after 5 p.m. and probably spend extra 15-20 minutes to record all your journals so that you now have balance carried forward of work the following day, fine. If you also have enough mental energy and strength to be very accurate under pressure, not to carry one journal and record it 3 times, it's also fine. Or best believe, any journal you record, you can have a book beside you. You put the journal number of that journal and probably 1 or 2 things you use to remember that journal at a glance. So cash, bank, so thing, full stop. So when you want to record it again and you look at that book, okay, you remember that you've recorded this journal before. That's it. So there should be a control if you want to record journals immediately after the transaction to avoid recording the same journal twice. So that's the whole scenario around the journal. Sorry, please, Madam Betty, does that answer your question?
Yes, thank you.
Okay, so I guess that is that. Please, is there any other question? So I would like to attend to all the questions so we can start. Any other question from anybody? No, okay. So the first thing we have for today is a review of prior learnings. So far, so good. And area of proximity. Review of prior learning. Can somebody tell me what we learned yesterday? Just an overview. What you learned yesterday. You do that so we commence, please. Is there anybody that learned anything yesterday? Okay, so what features of QuickBooks that we've not yet touched? That's number 1. And then number 2, we'll look at the reports, the various reports, and how we can use them. So then after that, then we'll hover around the remaining part of the software. So that's it. So tax and a handful of other places that we've not touched. Then we'll look at reports, we'll view reports. When we're done viewing reports, then I think we are done. So on the part of the tax, this is the tax overview. So this is where you set up any tax that you want to add to your invoice. Any tax that you want to add to your invoice and your receipts, this is where you set it up. So you come, let's assume you came to home. When you come to home, because when you open your software will bring you to home page. It will be at the home page here. So when it brings you to the home page here, you come to this place and click on tax, and it will bring you to this place. It is not difficult, it's not impossible, it's just technical. So you click on set up tax, and that is it. So let us set you up with the right tax codes for Nigeria. If you want QuickBooks to use your hand and set up the tax ledger and put the tax codes and allocate them in your sort of account, you click next. If you want to set up the tax codes by yourself, you click this place. Me, I don't have strength for stress, so I'll always click yes. But if you want to find out how to adjust the tax code, you can attend any of our premium classes and pick that up as a personal question, and we will answer it in details. Thank you very much. So now we can say that can tell us how you currently handle sales tax, and we'll do the rest. The agency is FIRS. So the software have been at the back end imputed with specific information that the white man has of Nigeria. So you are the one that will now give it the remaining part of the information. So you know that your tax is meant to be monthly for VAT. Sales tax is VAT. So that's what they call sales tax. So you know it's meant to be monthly. And the start of the period is January. Please leave this thing as January unless your financial year end period of your company is not 31st December. So if the financial year end of your business is probably, okay, like EY, their financial year end is 30th June. KPMG, their financial year end is 30th September. So there are companies like that, it varies. So if your company, let's assume this, you have a company, okay, Kotek, in any way, it's also a company, their year end is 31st March. So since their year end is 31st March, the start of their tax period is April. So it's going to be April of this year till 31st March of next year. So that's their financial year. If it is not like that, if your financial year is 31st December, carry this thing back to January. So if we are the ones setting internal control processes for businesses, we just used to do them January to December, so everything will be straightforward. So that is that for that. Then because Nigerian tax system is fluctuating, they kept this place empty. So when you come here, you give them the percentage involved. That is it. Then after that, your team, this thing is not really necessary, but if you still want to put it, you can go ahead and put it. So the next thing is you're ready for your tax track, blah 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 blah. This is a video of how to go about sales tax tracking and so on and so forth. The UI UX part of this is very bad, very very bad. I remember personally giving QuickBooks a feedback on this. I sent them a mail, and as you can see, white man no value black man speech behind be that. So you remove this and you click your OK, and you move on. So if you want to like look at the video, fine, you can go ahead and look at the video, and it's just about sales tax and how it works. There's nothing there. So the next thing you do is to customize your invoice. Customize your invoice. Most persons don't usually customize their invoice, but the reason why I like opening the customized invoice is to ensure that after setting up this tax, that it is going to appear on the invoice. So as you can see, the tax appeared on the invoice. So if it appeared on the invoice, okay, I'm happy, good boy. I'll go back. Thank you very much. Exit without saving because I did not change anything, and I'm going back to my house. And that is how to set up tax in QuickBooks Online. Set it up. That's it. So the next thing we have not looked at is we've spoken about this bank connection. So if you want to like have an experience on how to connect your bank account, you can pull in for a premium class. We'll use your own details and your own bank. Use your own details, create a QuickBooks account, we'll connect your own bank account, and you will see how it works. But if I will advise you, please, for your reconciliation procedures, just upload your bank statement. Then when it comes to bank reconciliation, you can connect to your account, like I've always said, and you can upload your bank statement here. So if you click on this place, you select the accounts that you want to reconcile. Now, in your chart of accounts, you're not supposed to have just this. You're supposed to have, if you have more than one account, it is not advisable that you use this. So you're supposed to have different accounts for the different banks you are operating for your business. So you select the particular one. So if you're uploading Access Bank statement for reconciliation purposes, you come here and select Access Bank. You not just come here and select cash and cash. You look for Access Bank as part of the list, and then you select it. You can also add an account here. If the account is not existed and you want to reconcile it, add an account, and that is that for that. So yeah, if you click on this place, you upload your bank statements. Okay, let's just do a demo. what it's meant to look like. I don't think I have a bank statement on this computer. I don't think I have a bank statement. No, I don't have a bank statement on this system. I don't have a personal bank statement here. This is my work system, it's not my personal one. But if you click this place and upload the bank statement, you click next, you map it the way we mapped customers, and you click upload to upload. That's all. So there's nothing special in this place. Then reconcile is still linked to this. Reconcile is still linked to this. Now, if you've uploaded your bank statements and there are reconciliation items, you come to reconcile and you will see them. Then you can now post them correctly. So there are items in your bank statement that may not have been posted, and there are items you posted that are not existent in your bank statement. So you tidy them accordingly so that the balance in your ledger will agree to the balance on the bank statement. So the next is chart of accounts. Under chart of accounts, this is where you are. This is more like your trial balance. Chart of accounts in QuickBooks is like your trial balance. So it shows you all the accounts you have, all of them, all the accounts you've created, both the ones that you are using and the ones that you're not using, all of them are here. As long as you've created the accounts, it will be here. Then the balances for each account will be existent in this place. So it's just consider this place your trial balance. So if you want to create a new account, you come here, click on new accounts, and you create it. If you want to bring in multiple accounts, you can import your chart of accounts. Probably you have a trial balance already in Excel. You convert your Excel to a CSV and you bring it in here through import chart of accounts. So everything that has to do with importing records follows the same system. That's why I said QuickBooks is one of the easiest softwares to use. Everything about importing anything follows the same system. The way you import customers is the way you import inventory, is the way you import vendors, is the way you import chart of accounts, is the way you import anything. Convert to a CSV file, that's number one step. You convert to a CSV file, the next thing you will do is to upload that CSV file. The next thing you will do is to cross-check if the headings are correct, that the software is picking where the software is meant to pick for a particular item. The next thing you click on, upload, and it will upload. That's all. So all of them are exactly the same thing. But if you still want a physical view of this, you can do a testing. Take a testing. Testing. Okay, let me pull up a trial balance. So I'm pulling up a trial balance now. I'll pull up a trial balance now, and then I'll convert to a CSV file. Right, it will be easy for us to use. Convert to a CSV file. Hold on, I think it's best if I use Google Sheets here, so it will be easy. I think it's best if I use Google Sheets here. Oh, sorry. I've not shared what I'm doing. So sorry. So this is the Google Sheets page. So this is our own just small sample of a trial balance. The debits, the credits, the totals, and so on and so forth. So I would remove these totals because they are not necessary. And that is it. So I would bring this down, download as CSV. I've downloaded it. Then I'll come back to QuickBooks and upload. So we're back to QuickBooks now. We'll upload. So you run the imports. They also have a sample template here, Shao. And I did not even consider the sample, but as well. Okay, so we did not put the account number, account type, and details, but it's fine. Just had the account name should be account title. No, we have to adjust this. We have to adjust this. So this will be account number. So I'll put 001. One one zero zero 1101 and 110 1111 1201 1211. No, this is liability, so it's going to be 201. So 2101 3 5 and maybe rent 001 6101 6111. So then the next thing we are going to put is the type, account type. Account type. So the account type will be current assets, current assets, current assets, non-current assets, current liability, non-current liability. Owner secretary, revenue, expenses. The revenue will be expenses. So we have it. So download again. I'll come back to QuickBooks. We have to cancel and re-upload. So account number is account number. Account name is account title. Account type is account type. Detail type still be account type. So this is where you classify the accounts according to what QuickBooks has. Okay. So there's a lot of adjustments you make here. A lot of adjustments. Inventory is still current assets. It is meant to be accounts receivable, sorry. Yeah, so inventory is current assets. Hence, non-current assets. No, it's fixed assets. Sorry. So we did not specify the equipment, so we'll leave it like that. Accounts payable is account payable. Still the account payable. Bank loan is non-current liability, which is long-term debt. Capital is capital is owner's equity, and the use owner's equity for that. Sales revenue is revenue. It's under income. Sales of product income is fine. Rent is expenses. So use rent or lease of building. Salary is expenses. Use payroll costs. Then utilities expenses is detail and admin expenses. So we're done. Click on finish. They'll bring in all your accounts. So one account was already in your set of accounts. We did not import it. So they brought in all of them. So as you can see, we added all the new charts of accounts. All of them are here. We added all the new chart of accounts. So that's for chart of accounts. Then there is a recurring transaction. I don't think there's anything you need this thing for, but this is where you fix transactions that you want to automate. This is where you fix transactions that you want to automate. But you don't really need this. You don't. So the next one is feature. So this is also one of the features I'm sure you don't need. This is where like you can stay here and invite invite somebody to oversee your records. So when we create an account for a client and the client wants us to oversee their records for a long time, we invite them from here. So you just click this place. We invite ourselves from here inside their own profile. So when we are done creating the accounts, we just use this place to invite ourselves. Then we hand over the login details to the client. So from our own end, we can now manage what the person is doing. So there's what we call firm ID. That is, if the firm already has a QuickBooks account and so on and so forth, it's fine. But you can invite with email. So you put the person's email, you send the person an invite, and that's all. That's what we're doing. So you can also invite users here and manage your users too from this place. You can invite users and manage your users from here. So that's that for this part of the conversation, and we're going back home. So if you need more depth knowledge of how to use that place, I don't think it's necessary, but I just wanted to show you where to find words. So if you still need depth knowledge, you can reach out. The next thing we're opening is expenses and views. So I think we've treated these two. We've treated both suppliers and we've treated bill. We've done it in the last class. So we're moving on. The next thing is sales. So this is the overview of sales. This is where you see the statistical view of your sales, more like statistical analysis and so on. So this is the summary of your sales transaction. It comes in like this. It's the summary of your sales transaction. So anytime you walk into significant places, QuickBooks will give you this pop-up. So just be clicking next so that they'll be showing you where everything is. But I don't have time, so I'm cutting it. But if you're clicking next, they'll be showing you around, showing you this is where you find this is where you find this is where you find the other one, and so on and so forth. So we've handled invoices, we've also handled sales orders, we've also handled products and services, because we've done everything about this product and service. Creating product 1-1, we've done it. Batch creation of products, we've done it. Importing products, we've done it. So we don't have anything to do here. So having said that, we are covering this, and we come to customer hub. So all these ones that I'm saying we've done, you can look at the videos of yesterday's class and Friday class to refresh your memory on it. And if you have questions after reviewing those videos, please, you can always reach out and we'll answer you. We'll reach out and we'll answer you. So before I move on, please, is there any question? Any questions so far? No question. So if you want us to continue, please, can you identify by raising up your hand? Let me be sure you are hearing what I'm saying. You'd like us to continue? Okay, that's fine. Good. That's fine. Okay, thank you. You can bring your hand down now. Thank you very much. Thank you. So that means no question, and you want us to continue. That's fine. So under this place, this is more like the overview of the customer hub. So you can create an estimate here. An estimate is like an invoice, but it's not really an invoice. You are more like giving a quotation. You're more like giving a quotation for a product or a service. That doesn't mean you've actually sold it. It's just that you're identifying that a customer is intending to patronize you, or a client is looking forward to working with you. For business-related services, they have clients. For products-related services, they have customers. And we discussed in the first class that business organizations are split into two. We have product-related businesses and service-oriented businesses. Under product-related businesses, they are also further split into two. We have the manufacturing businesses and the trading businesses. Two of them are also split into two each. The manufacturing business is split into two, which will give us the manufacturers of raw materials and the manufacturers of finished products. And we said that the manufacturers of raw materials are those whose finished products serve as raw materials to other manufacturing companies. And we made an example of Polycap Nigeria Limited. So we said Polycap is a company that produces plastic container, and that's their plastic container is a raw material for bottled water companies. They use those containers, those plastic containers, as a raw material which they use in packaging their bottled water. So in that example, the bottled water company produces finished goods. Polycap Nigeria Limited produces raw material. So we also said that the trading companies / merchandising companies are divided into two. We have the wholesalers and distributors. Two of them are grouped together. Then we have the retailers. So the wholesalers and distributors are people that sell to other businesses. Then the retailers are people that sell directly to customers. So that starts for the class of business. And we said, and here we are looking at estimates. If you are into a service-related business, or you are into production or anything, and somebody wants a customized, I'm not sure all the services require estimates, but no, there are services that also require estimates. Like if somebody wants, let's say a company reaches out to OFS as a service-based organization now, and is saying, OFS, we know you used to train people online for QuickBooks and so on and so forth. Please, can you give us a proposal that of what it will cost us to engage your services to train 20 of our staff on QuickBooks and Sage 1? So we'll say, okay, fine. So we'll come here under estimate in our own quick entries. We add the customer name. If the customer name is not in the list of your customers you have, you click create new and you add customer. We've had that conversation before. You have to go and look at it at Friday's video. Then so we're adding customer here. So our customer is Augustina. So you are feeling this. You are feeling this exactly how you feel your invoice. No changes. It's exactly how you feel your invoice. So the product you're estimating on, or in this case, service. So that's it. That's all. The rate is editable because assuming your normal rate is 20,000, but then it's another company. You want to charge them 100,000, so you can still put your 100,000 here. and it will still tally. And QuickBooks will still recognize it as 100,000. And you are telling them that you're training one staff at 100,000, and they have how many staff again? 21 staff. So for 21 staff now, that will give us 2.1 million naira, and we send them this estimate and say, hey boo, this is your estimate for 2.1 million. We don't use boo, sorry. So hi Chinedu, let's assume it's Chinedu that sends the mail. Please find attached the documents containing the estimate, blah 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 blah. Best regards. Thank you very much. So you send it to the person. So this is create an estimate. If you want it to be exclusive of that, fine. Inclusive, fine. If you also want to tell the computer that it's out of scope of VAT, you tell them it's out of scope of VAT, and the moment you click this out of scope of VAT, the VAT column will evaporate. So that is that for that. And then you can save, you can save and close. We've discussed all these things. You can review and send. So all of them is shared together. So I'm doing save and close, and shall look at how we treated invoice and learn, save and new, and review and send. Thank you. So still under customer hub. It's we have customer and leads. So under customer and leads, these are all your customers and their balances as at date. These are all your customers and their balances as at date. Then these are your leads. Now, QuickBooks have this feature where you can connect to your Gmail or your Outlook, and all your leads will reflect here. You can also fill up this survey, or you can also either import or create a contact form for your leads. Now, what is leads? Leads are people that are not yet customers, but you are looking forward to making them your customer. So let's assume that we have an ongoing conversation with which hotel should I use now? Okay, let's assume we have an ongoing conversation with Hotel Presidential. And then we are saying that, okay, we've started this conversation, we want to conduct external audit and oversight for them, and they have not yet said yes, they have not yet said no, the conversation is still ongoing. That hotel is now a lead, because it's not yet a customer, but it's still a prospect, and it's more like work in progress. So you treat it like work in progress. So when you connect any of these, you can fill the form. There's a form here. You can fill the form, and fill the form. So this is the draft of what the form needs to look like. So when you are done, you publish it. When you publish it, it will give you a link. The link is what you now either share it to the people, or you share it to yourself and fill it on behalf of your clients one by one. That is if you want to fill the form. If you don't want to fill the form, probably you have their names listed out on an Excel or anything, you can just upload it. You can just upload it by clicking on manual upload. You'll upload it by clicking on manually added and imported. So you just click on this add lead. So you see manually add, you see import file. So if you add them one by one, click on manually add, upload the file, you click on upload file. So that's that for customers and leads. So the next thing we have is opportunities. Opportunities look like leads as well, but all these things are just unnecessary information that becomes necessary when you need them. But it's not really an accounting thing like that. So that's why I'm not giving it so much attention. It's not really an accounting thing. But if you still really want to know how to use it, or you want us to connect one or two for you, you can reach out and we'll do that. So you can add an opportunity here by uploading a file or by manually adding them one by one. So the next thing we have is estimates. We added estimates under overview. Now, if you want to see all your estimates that you've sent out, That is all the proposals you've ever sent. You just come to estimate and you see all of them. Then estimate and proposals are almost the same thing, but a proposal is more like how should I even put it? Proposal is more like a PDF document and so on and so forth. An estimate is an invoice. You send a proposal when the person is still contemplating whether or not he will work with you. You send an estimate when the person has already decided he will work with you, but he sure wants to know the price. You don't send invoice when somebody is making an inquiry. You send an estimate. So the next thing here is contracts. So the next thing here is contracts. This is where you have a list of all the contracts you've signed. And this is where you record new contracts that you receive. So if by adventure during the course of the business and you receive a contract, you can come here, click on create contracts, fill in the details of the form, and that's it. We don't have any list, so you can add new. So as you can see, everything in QuickBooks, they look alike. This is the form for picking the lead information, and it looks almost the same thing with the customer and the vendor form. The only difference is that in customer and vendor form, this display name came first, company name came last, came over here. So this display name is here, the company name is this side. That's all. The rest is the same, exactly the same. You can take your time and look at it. So they're exactly the same. You fit, click on save, and you have it. Then you select the customer here, click on continue. A form will open, and you fill all the details, and to create a contract for you. That's all. It's not hard. It's not a big deal. Under this review, I don't know, but I basically believe that this is also one of the marketing features QuickBooks included to enhance user interest. This has nothing to do with accounting. Nothing. It does not have effect on any of your financial records. So if I were you, but if you want to know more about it, you can come to our premium class and we'll do a demo for you if you bring it up as part of the question. So this is employee parts. So under employee, this is just more like filling forms to add the details of your employees. That's also, if you want to use QuickBooks to work on it, you fill this form and click on add employee. That's all. But I don't like this employee feature here because it does not carry the salary you agreed you pay the person. So, but this is the form you will fill. But then there are by the time you create the person's profile, the profile will come up and you will still make some adjustments inside it. So, but to be frank and to be honest with you, QuickBooks is not yet beautiful enough for payroll. So if you want to automate your payroll, I'll advise you have a third-party app on payroll and synchronize it. I'll advise you have a third-party app on payroll and synchronize it into your QuickBooks. That's all. So that's all for the payroll. So we've discussed about projects before when we were discussing sales. I don't think it's wise handling it the second time. So inventory, everything under inventory, we've discussed it. Everything. Discussed everything under inventory.
I have a question, sir.
Okay.
Is inventory tied to fixed assets register on QuickBooks, sir?
No,
we
now.
have not gotten to fixed assets.
No, now. Inventory is not tied to fixed asset register. You bring in your fixed assets, the opening balance of your fixed assets as journal entries. We discussed it. We said
From
yesterday.
the AFX or from the inventory?
Like if you want to record opening balance of like the initial record for the fixed assets, you record them as journal entries. So when you record them as journal entries, it will recognize it. Then you go to reports and wait for them. There is the inventory is not tied to fixed asset schedule. Inventory is just your inventory, normal inventory you buy to sell. So does that answer your question, Mr. Dan?
Yes, sir.
Now, in addition to what I've said so far, I don't think QuickBooks have PPE schedule. If they do, it's an update that I'm not aware of and I've not seen it. They don't have a PPE schedule. In fact, all the companies, what?
They should have, sir.
But they don't. They don't have a PPE schedule.
Under the menu bar, I don't know that these people did not incorporate it, but it used to be under the menu bar, this assets register.
This is
Access
the menu
register.
bar. This is the menu bar. See the create. This is where you add. This is where you make all your new entries. So if there's a fixed asset register, you will see something like add assets here. You understand what I'm saying? You will see add assets here. So it's not
Yes,
here.
sir.
Do you get? This is more like
Yes,
a
sir.
summary of all the features QuickBooks have. So you come here as a shortcut and make new entries everywhere. So instead of going to customer, open the overview, and from there you select a customer and click on the invoice. You just come here to plus, come under customers, click on invoice, and create your invoice like that and go away. So this is the summary of everything they have. It's not in the summary, and it's not in the listed itineraries that make up the transaction. They call this all apps. This is all the apps. And it's not under accounting. Where it is meant to be is under accounting. It's not under accounting. So it's not under accounting. They were where I was expecting to see it initially when I saw this update. It's under this my accountant. But what they imputed in this my accountant is where you add and remove users.
So if you want to do reporting now and you go to PPE under non-current assets, how do you now go about that? If QuickBook is now incorporating non-current assets.
I get what you asked. Okay, now for the reporting part, normally you export the chart of accounts to Excel. When you export it to Excel, you prepare your notes to accounts. When we get to reports, I will show you why I am advising people to export chart of accounts to Excel, pull notes to accounts.
That means, sir, we can create our fixed assets register, our assets from our chart of accounts by creating their names, furniture and fittings, opening balances,
yes, you can create that.
Balances. Whatever.
Yes, you can create that.
Thank you.
You can create that. So when you create them, no, you can have records of all your assets on the software. In fact, let me open that chart of accounts so that you see what I'm saying. You have the records. You can't have it the way you see your PPE schedule. You can't have it as PPE schedule. It will carry depreciation, addition, disposal, transfer, and so on. No.
Yeah, it would have been interesting.
No, it's not possible on this software. It is not. But you can recognize the software and the amount. You can also recognize the depreciation. You understand what I'm saying? So you can create an account and call it depreciation for this. See, now this is accumulated depreciation for PPE. Are you seeing this place my cursor is?
Yes, I'm sorry.
This is accumulated depreciation for PPE, which means you can now come under this place. You can open this account and see the account code. Open this account and you see the account code. Okay, the account code is not even here, sir. Fine.
It's showing assets accounts history, no more that formal name. I just saw it just now.
Yes, it's going to show you asset account history. What's happened? What's going on? Okay, now see equipment. This is PPE. This is asset held for sale. So when you finish setting up, before you start recording, after creating your customers and creating your vendors, you are supposed to come here. You're supposed to come here and check this chart of accounts. This chart of accounts, since I've known QuickBooks, is never going to be complete. Never. It will never be complete. So they're going to just give you highlights of things that they believe you are supposed to have. They give you highlight of things they believe you're supposed to have. So you are now the one that will now come under it. Use this new account and start creating accounts one by one. Remember when I said that under cash and cash equivalents, you're supposed to create different accounts for all the bank accounts you are operating. For all the bank accounts you are operating. So if you have 15 bank accounts, you are going to create 15 different ledgers on this software, each representing each of the 15 accounts. So the same treatment you give to bank inside this chart of accounts, that's the same treatment you give to PPE and accumulated depreciation on PPE. PPE, depreciation, and accumulated depreciation on PPE is the same treatments that you give to them. I think that's basically the only two things you need to add after adding your customers. After adding your customers and vendors. So you add customers, you add vendors, you add bank accounts. You add customers, you add vendors, you add bank accounts, then you add your PPE. That is the PPE recognition, the accumulated depreciation, and the current year depreciation account, the one that will net off in POL. You add that three, and you are
Sorry,
good.
does this chart also have intangible assets?
Yes, it has intangible assets. It has intangible assets. I want to show you. See it here. Intangible under non-current assets. So this is your goodwill. This is your other intangible assets. So they created this one and they call this under intangible assets. So when you are creating further intangible assets, you categorize them under this. This is the head category. All other accounts under intangible assets will fall under this one. Does that answer your question, sir?
Yes, sir. Thank you.
Okay. Any other question before we continue?
Yes, sir.
Okay. Let's have a question.
I think you understand what you meant by out of scope of tax.
I didn't get your question. Sorry. Do you mind?
Yes, sir. I said I didn't understand the meaning of out of scope of tax.
Tax.
Out of scope. There is a place that you say out of scope of tax.
Okay, out of scope of tax. Okay. Sharp. Out of scope of tax is there are items that are not taxable. So in as much as you have identified, there are items that are not vatable. Do you understand what I'm saying? There are items that you don't charge VAT on. So if those items form part of your inventory, if you're identifying your tax, if you're identifying when you finish filling your invoice or your estimate, you select out of scope of tax so that VAT will not be applied on that invoice. Does that answer your question now?
Yes, sir. Thank you.
So you use that for inventory items that are not vatable. Use it for inventory items that are not vatable. So if you are into those products that are not vatable, maybe you sell both the vatable goods and the non-vatable goods, fine. You set up your VAT. Then the punishment behind it is that each time you raise an invoice, because QuickBooks will automatically calculate that VAT. You've already told QuickBooks that it's 7.5%. The VAT is already there, sitting down there waiting for you. So it's just for you to tell it, brother, come on, this particular invoice, it does not have business with VAT. This one, it has business with VAT. Simple. So you select those things there and the computer will do the rest of the calculation for you. That is it. So I believe I have answered your question, Ma.
Yes, please. Thank you.
So let's move on. Okay, so after that, wow, this thing should stay one place now. So it will be my size. So after that, we've talked about everything under inventory. Like I said, we've looked at the overview, the inventory flow, the purchase order, the item receipts. We even did inventory adjustments when we went to create, and we showed the inventory adjustments. So we've treated these ones. Then we also said in the first class, it's in the first class that we treated this marketing. So in the first class that we treated this marketing, we showed you the various ways QuickBooks can actually help your life with marketing. So, but that is a very fake promise. That promise there is more fake than promise of Nigerian politicians. So, if you shall want to try it out, try it out. But don't say I recommended that to you. Thank you very much. Then the next thing we have is reports. That's what we have. I think that's the last thing we have for today. So under reports, we have what we call standard reports, the custom reports, management reports. You see that three? They're almost the same thing. This standard custom management is almost the same thing. The only thing that is different here is the financial planning. The three of them are almost the same thing. They are related and they look alike. So now, remember, I was telling somebody that I'm not advising you to pull QuickBooks balance sheet and QuickBooks POL if you want to go and file tax with LIRS or FIRS. This is because they don't apply IFRS at the face of their accounts. Let me open the balance sheet for you so you will see and you will understand what I'm saying. Let me open the balance sheet for you. I'm off a road. So as you can see, you know, normally on a balance sheet, on the face of the accounts, the only thing you're supposed to see is non-current assets, one figure. Current assets listed, then non-current liabilities, one figure. Notes to accounts will not take care of the rest. But in your front, just like that. So it's not actually an ideal way of handling things. It's not an ideal way of handling things. And I don't know how to put it, but I don't think if you want to do something serious with these reports you export directly from QuickBooks is for internal consumption because they were not properly presented. Assuming this is caseware will prepare your reports, your statement of financial position, your statement of profit or loss, your statement of cash flow. To also prepare all
another
your
software, sir.
I think people should learn to start raising up your hands in this my class. So, oh yeah, what's the question?
I was only observing. I said, is that another name for a software? Case service.
Yes. It's very expensive. Very expensive. We are still looking for how to get a demo of the software. When we have a demo of the software, we'll add it to the things we will teach. But we're not going to teach caseware as a free class. It's going to be one of our premium classes. So we won't teach it as a free class. One thing you need to know about account software is if you comfortably know softwares, there's no bookkeeping software that you cannot handle. So if you follow this program, these hot 4 programs that we're doing, and you understand the 4 softwares we'll be teaching now, there's none of the bookkeeping softwares in Nigeria that you cannot handle. Bookkeeping softwares are different from ERP, so you will not use the knowledge of QuickBooks and go to Oracle, SAP, or Microsoft Dynamics. You will lose. Those ones are ERPs. So, but if you know how to use Oracle very well, like you are very good in Oracle, you will just know what to look for, and with 2 or 3 minutes, you will find it inside Microsoft Dynamics or SAP. So that's just the difference. So this is what the balance sheet looks like. So if you want to export it, you can export it. So you come here, click this save as. Sorry. Before we start exporting, you can pull balance sheet of prior year, prior period, prior months from this place. Last week to date, last week to today, last month to date, last month to today. So you can do it. You can also select custom dates. When you select custom dates, you come here and say maybe from February 2024. Then you look. February 2024. I did not select a date, that's why I did not work. From February 2024 to yes. Is that done? Yes.
As I said, let's see the PP section of the report under the balance sheet.
We don't have anything under PP now. We don't have anything under PP. I don't think it will even show. We don't have any record under PP. None. So that's why it's not showing. Assuming we recorded something under PP, it will show. Do you understand what I'm saying?
Yes, sir. That's garbage in, garbage out.
Yes, that's exactly. That's garbage in, garbage out. So if we've recorded anything under PPE at all, even if the balance is 0, it will show and it will give us 0 balance. But we've not recorded it at all. So we've not recorded anything at all. That's why it's like that. So I think that is for this report. So the next thing we should look at is the POL. So I think after that we are done for the evening. It's already 9 p.m. It's already 9 p.m. So the same issue I have with QuickBooks again as usual. Same issue I have with QuickBooks as usual. QuickBooks will list all the expenses for you. As you can see, advertising expenses is showing on the face of the account, which is not meant to be so. Advertising expenses is showing on the face of the account. So that's the thing. So if you want to like use your report for something serious, please, it's not QuickBooks report. Just extract your chart of account and it will come in as an Excel file. You sit down, you do your notes to accounts, your POL, your SFP, your cash flow, and 5-year summary, and you rest. That's all. So having said that, ladies and gentlemen, the rest of the reports, you can just toy around it. And let me show you guys some reports. Some reports, yes, please, I forgot. This place will be empty unless you select a report and customize it. This place will be empty unless you select a report and customize it. So if you customize the report, it will come here. Then for management reports is things like sales performance, company overview, expenses performance. You can also create other management reports, like things management wants to see. All right, so you can come here and do a preview of the reports, and the head to come like this. So this is the management reports. To come like this. So that's the issue. So the issue I have with them always is that this thing will be here on the face of the account, and I'm not happy with it. So, but they are trying, they are improving small. Before, this PDF is not there. You export it as Excel, but now you have PDF. The PDF have been there since January, so they are doing well. They're doing well. So finally, for financial planning, it's just like budgeting and econometrics. So it's just budgeting, econometrics. This is your cash flow overview. Before I forget, this is your cash flow overview at a glance. What you've spent for the month, what you received for the month, overview invoices, everything. This is the money out section coming up, and so on and so forth. So this is just like a dashboard showing you your transaction. That's all. So this is your cash flow planner. So this is where you plan what your cash flow is supposed to look like. Make budgets. This is where you make budgets. Then last but not the least, the budget itself. Last but not the least, the budget itself. So every other budget apart from cash budgets, you can create it here. But this is for cash. Here you create your cash budget under cash flow planner. Under budget, you create other budgets that is not a cash budget. So you can also import your budget as well. Before you import your budget, like the way you import every other thing in QuickBooks, download the sample, ensure the headings correspond, and that's it. So having said that, I want to be sure there's no other question before we call it a night. Is there any other question? Mr. Walter, what's the question?
Okay, I want to know examples of taxable and non-taxable inventory.
We want to know examples of taxable and non-taxable products.
Inventory items, yes.
Okay, that's fine. We'll attend to that. Madam Gloria.
We talked about getting the manual for what's the name of it. So I was asking how much is it? The manual for this QuickBook.
The manual. Okay, so
Yes,
the
sir.
hard copy. The hard copy was
Yes.
listed at 7,000 this morning. So you get it on Amazon. Yeah?
Okay, sir.
Yeah, you get it on Amazon. It's available on Amazon. We published the book yesterday / this morning because they had some feedback for us. So Amazon will review. It's when they are done with their review. That's when they will now make it available for the general public. But we've given it to them. It's now them that will now know when they can make it available for consumption. But the book is on Amazon. So the only thing is that I'll check. Once the book is available for sale, I will notify the entire group that the book is available for sale. Probably just do a screenshot of the book on Amazon and send it as a notification. Then also send it as a mail as well, so that everybody will be in copy. I think that's fine.
Yes, sir.
Okay, thank you very much. So, to answer your question, Mr. Walter, there are items that are tax exempted. Things like agricultural products, medicines, like medicine, drugs.
Petroleum product.
Thank you. So the handful of
Agriculture.
yes, agricultural products as well. So basic food items like fruits, vegetable, you get. So all those ones are not taxable. They are not taxable. So if you are selling a provision store, probably a supermarket, and part of your inventory contains agri products, unprocessed, not the one that is inside somebody's nylon and branded with somebody's logo, unprocessed agri products, or you are selling fruits and vegetables, they are not taxable. There are supermarkets that have a section for beverages and a section for drugs. That section for drugs, vaccines, and insulin, that section is not taxable. So probably in your invoice, as somebody that walked into that supermarket to make a purchase, maybe you bought Fanta, you bought Coke, you bought Sprite, 3 of them are taxable and they are in your invoice. And then inside the same invoice again, you bought a vaccine. That vaccine is tax exempt. So they will put that option on the face of the invoice so that QuickBooks will not calculate VAT for that item. So I don't know. Does that answer your question, Mr. Walter? Mr. Walter, does that answer your question?
Yes, sir.
Okay. So I think we are done. If there's any other question, I would like to have them. Any other question? So as part of our conclusion, we want to say thank you to everybody. So far, so good, for attending this lecture to the end.